Spotting longs versus shorts with AI prompts. Every market has two sides. Some stocks are trending higher while others are being heavily shorted. With the right prompts, you can use AI to see both sides of the table. This video is for education only. Always check with a licensed financial advisor before making any investment decisions. Prompt 1. Analyze the 10 stocks with the highest short interest this month. Include the percentage of shares that are shorted. AI might highlight a company where 40% of the float is shorted. That tells you traders are betting against it. This does not mean you should buy or sell. It simply shows where negative sentiment is concentrated. Why it matters. High short interest can be a red flag that confidence is weak. It also highlights areas where short squeezes may occur if prices move the other way. Common mistake. Many beginners see a highly shorted stock and assume it is a guaranteed opportunity. In reality, heavy short interest usually points to underlying problems. Prompt 2. Identify 10 companies where short interest has increased the fastest in the past 30 days. This is helpful because rising short interest often signals growing doubt or concern about a stock. For example, you might see a retail chain that had little short activity last month but suddenly doubled in short interest. That kind of shift is worth noticing. Why it matters. Rapid changes in short interest highlight where the market's perception is shifting quickly. Common mistake. Watching the percentage alone without the time frame. A stock with stable high short interest is not the same as one that is building short activity rapidly. Prompt 3. Highlight the sectors with the most short interest right now. Instead of looking at single stocks, this helps you see if traders are betting against whole areas of the market. For instance, if short activity is building in small cap tech or in certain energy companies, that is a signal about where risk perception is climbing. Why it matters. Sector-level short interest shows broader themes, not just isolated companies. Common mistake. Many people look only at individual stock names. If you miss the sector picture, you miss the bigger story. Prompt 4. Analyze the 10 U.S. stocks with the strongest upward momentum over the last 3 months. Include both price movement and trading volume. This will show you where buyers are stepping in. For example, you might see AI point out a semiconductor stock that has had rising volume alongside steady price increases. That is a trend worth studying. Why it matters. Momentum paired with volume is one of the clearest signs of institutional buying. Common mistake. A common trap is chasing a stock on price action alone without confirming the volume trend. That is how false breakouts happen. Prompt 5. Identify 10 companies that have received the highest number of positive analyst revisions in the last quarter. This does not mean analysts are always right, but when multiple upgrades cluster together, it often shows where confidence is growing. Why it matters. Positive revisions help you see where expectations are rising. Common mistake. Treating analyst upgrades as a guarantee. They are useful signals, but they still need to be confirmed by earnings results. Prompt 6. Show the 10 exchange-traded funds with the largest inflows this month. List their top holdings. This gives you insight into where institutional money is flowing at the fund level. For example, if a healthcare ETF has taken in billions of dollars of inflows, it suggests that large investors are positioning themselves there. Why it matters. Watching ETF flows is one of the easiest ways to track big money trends. Common mistake. Beginners often watch only individual stocks. Fund flows can be a leading signal for broader moves. If you liked this information, do me a favor and hit the like button. It really helps the channel and tells the algorithm to share this with more people. Save it so you can come back to the prompts later and share it with a friend who follows the markets. And follow Wealth Flow Daily so we can keep bringing you more safe, practical strategies you can trust. These prompts are not financial advice. They are research tools to help you learn and have smarter conversations with your advisor.